Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken. Today is July 15th, 2023, and our model portfolio is up year to date 5.9%. Here at Spy Trader Now, our goal is to beat the returns of the S&P 500 buy and hold investor, but they are killing us. They're up 17.33% year to date. We're only up 5.9% year to date. So more than half the year is over with. So we've got some catching up to do. So stay tuned, see if we can make that happen in calendar year 2023, because that is definitely our goal here. So far, we've made 22 round-trip trades, and let's go through the presentation. Past results for Spy Trader Now in 2022. A very good year, up 21% compared to the S&P, down 19%. You can see the returns in 2021 and 2020. Last week, the S&P 500 for the week gained 2.45%. We'll go through the charts in much greater detail later on in the presentation. I did make a trade during the last week, and on 7/12/23, we bought 3 long call options because I'll show you on the charts why and when I made this particular call, but the market is definitely moving up with higher highs and higher lows. So I wanted to, I'm not getting the pullback that I was looking for. If you've been watching my episodes, I'm currently also in a covered call position that's in the money, and I was hoping to get a little bit of a pullback so I could close out of that contract at a profit, but the market is just so strong that never happened, and the market's just continually advancing. So this is a trade that I made last week. And here is, I've got 3 open positions right now. So we have currently 200 shares of SPY that we had for a purchase price of $428.57. Now, I put in here yellow because it's still an open trade. Everything that's not yellow is closed trades. But that's the current price for SPY as of end of trading on Friday. Also, there is our covered call position that's in the money, and that's what we would take in order to close the position. But I don't want to close that position out right now. I want to leave that opened and let it roll off the books. It expires actually next Friday. And in addition to that, we also have, what do we have? We just purchased our 3 long calls. We purchased those. We purchased those at $13.28, and the price of that particular call at the end of trading on Friday was $13.70. So just a small profit on that. Here's our equity curve for calendar year 2023 for the model portfolio. Because that in the money covered call position is losing value because the market's going up, we took a hit last week on that. That should be more favorable when it rolls off the books. And here is the equity curve for the SPY buy and hold investor year to date 2023. And here is the 2 equity curves combined. Our goal here at Spy Trader Now is for our model portfolio to be above the buy and hold investor. It's just been a very tough year for me this year in 2023. Here is the Fed Chair, Jerome Powell. Last interest rate hike was done on May 3rd, 2023, 25 basis points, and here's your funds Fed rate right now. And the next Fed announcement will be done on July 26th. There's a good probability we'll have a 25 basis point rate hike on that announcement. Now we're looking at things from the presidential election cycle theory, which states that depending upon which year of the election the president's cycle is in, you have historical rates of return. Currently, President Biden is in his 3rd year, and historically, the 3rd presidential year has a gain of 16.3%. Currently, the market is up year to date 17.33%. Now we're looking at things from a bond market outlook. The bond market is pretty much stay away from the stock market, and we want to listen to the bond market because it's 4 times the size of the stock market. Currently, the bond market has an inverted yield curve. Short-term yields are yielding higher interest rates than the longer-term 2-year and 10-year yields. This is all inverted, so this will go back to normal eventually. And every time it is we've experienced this for excessive periods of time. The United States economically has experienced a recession. That hasn't happened yet. The Fed Chair Jerome Powell's done a fantastic job of basically giving us a soft landing so far. Anyways, we also have rising interest rates. So we just want to keep an eye on this. There's links for everything that I'm showing you on the webpage that I'm showing you, and also it'll be in the description down below. Just check down below if you want to research any of this product on your own. All right, now we're looking at things from a valuation standpoint according to CMV. CMV is telling us that the market historically is overvalued by 53% above its 10-year average PE ratio. So that puts us on a standard deviation chart here at 1.3 standard deviations. So risks are definitely elevated. Now we're looking at the Fear and Greed Index according to CNN Business. There's our friend Warren Buffett. And currently we are in the extreme greed category, so caution is advised. And now we're looking at things from a seasonality standpoint. On a seasonality standpoint, you can see that the market is up currently 1.35% for the month of July. The month of July has a 70% probability going back 20 years of being higher than when it closed. Currently, the market has accomplished that. And the market is so strong right now that it looks like it's going to be, favorable month. After that, we seasonally go into what's called the doldrums, but we'll take it one step at a time. Today, we're only halfway through the month right now. Now we're looking at things from a long-term outlook. This is a 20-year monthly chart for the S&P 500. Long bull run, 2009, correction down here, broke out, and never looked back. This is an unsustainable angle, so this will eventually come back down. But right now, we just had a MACD crossover, and slow stochastics is strong. This is bullish from a long-term perspectives chart. Now, this is a weekly chart, 5 years, S&P 500. So each one of these candlesticks represents 1 week's worth of data. So it's an intermediate term outlook. And here we've just reached this last high before the all-time high, which is right here. So we are right now hitting that. We're going to see how the market reacts now that it hit this resistance point at 450, basically. Now we're looking at daily bars for the S&P 500. We're only going back here 6 months of data. And here is where I was looking for a pullback to happen, a little bit deeper of a correction. That deeper correction never happened. I was hoping to close out of my call position when we hit this here. Never hit it. Never even hit the 38.2 on a Fibonacci retracement. So so this is the day that I ended up buying that long call, because here you demonstrated that you're making a high, a low, a high, a higher low, and then a higher high. As soon as you did that, you made a higher high. That's when I bought that call, because the market now looks like it's advancing into higher territory. Now we are looking at a ratio chart for the equal weighted RSP ETF compared to the normally weighted SPY ETF. Now I've got 3 graphs going on here on this chart. So the ratio chart is the one with the black and red lines. The green line is RSP. The blue line is SPY. Now, when you have a good bull market, your equally weighted SPY can outperform under normal conditions the normally weighted SPY. And you can kind of see how the ratio chart reacts. Now, on a MACD basis, in the last 20 years, we've only come down this deep 3 times. Here in 2009, here in 2020, and right now in 2023. After the MACD crosses above its signal line, pretty much the worst is behind us, and clear blue skies are above. Here, there's a little bit of a correction that happened. So we are almost at a MACD crossover right here that's happened in this deep of a correction in the last 20 years. So it's possible that we are now entering into this new run happening right now in 2023. So we need to monitor and watch this. So that's what we are doing. And now we're looking at it from the VIX, which is the volatility index. And right now we are just at rock bottom low. MACD has peaked. It looks like it's coming down below its signal line, and it looks like we're hovering in this area. If you're going to stay in this area, the S&P 500 is going to continue to advance. Now we are looking at things from the TD Ameritrade's Think or Swim platform, where you show standard deviations, +2, -2 in gold, +1, -1 in pink. And right now we're between the +1 and +2 standard deviation on this chart. Now I put an alert in here to when we hit the +2 standard deviation, which is currently at about 460.76, I'll get an alert on my cell phone, and I'll close out that long call position because I'm pretty much peaking about as much profit as I can squeeze out of that. The risk-reward ratio at that point in time would not be worth it to me. I'll exit that long call if that alert gets sent. And so we're monitoring this. Now we're looking at the same platform, except instead of going back 1 year, this is only going back 3 months worth of data. And basically we're in buy the dip mode because the market is acting so strong. So on this chart, we're between the midpoint and the +1 standard deviation. So plenty of room to grow here, but we haven't spent much time here in the +1, +2 standard deviation territory. So you come up towards the +1 and then it tapers off and then begins to come down. Okay, I've just given you a ton of information in this video. Now comes critical thinking. What are we going to do with that information? Well, as of July 15, 2023, the market summation according to me, Spy Trader Now. I am your host. My name is Ken. I have my positions in place. I showed you all my positions I've got my in-the-money covered call, so I've got downside protection if the market decides to correct from here. Also, if the market goes up, I'm going to get better gains here because now I've got a leveraged call position in place, and you saw that. And I've told you that if it hits that 460 level, I'll just sell that long call at whatever profit the market will give me at that point in time and bank those profits, because then the risk-reward ratio is too great. I hope you got some valuable information out of this video. If you have not done so already, go ahead and hit that subscribe button, ring that bell to be notified. Help me promote this video by smashing down that like button. I wish you good trading.